Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Beijing Jingneng Clean Energy Co. Limited Annual Report. Beijing Jingneng Clean Energy Co. Limited is a leading clean energy provider that offers a diverse range of services to meet the growing demand for sustainable power generation. The company's primary business includes generating gas-fired power and heat energy, wind power, photovoltaic power, and hydropower in mainland China and internationally. The company has an impressive installed capacity of 17,437 megawatt MW, with a significant presence in various clean energy sectors. Its portfolio includes 8 gas-fired cogeneration plants, with an installed capacity of 4775 MW, wind power generation capacity of 6858 MW, photovoltaic power generation, installed capacity of 5268 MW, and hydropower installed capacity of 310 MW. In addition to its core business, Beijing Jingneng Clean Energy Co. Limited also offers a range of supporting services. These include repair and maintenance, investment management, and finance leasing services, which enable the company to provide comprehensive solutions for its clients. Furthermore, it sells electricity to local grid companies, facilitating the distribution of clean energy to households and businesses. Overall, Beijing Jingneng Clean Energy Co. Limited is a prominent player in the clean energy sector, with a strong presence in various markets and a commitment to providing sustainable power generation solutions. Its diverse range of services and impressive installed capacity make it an attractive partner for investors and clients seeking reliable and environmentally friendly energy sources. Beijing Jingneng Clean Energy Co. Limited market capitalization of 20 billion is materially smaller than most of its industry peers of roughly 62 billion. Beijing Jingneng Clean Energy Co. Limited trades at a lower price-to-earnings ratio of 6 times and a lower price-to-book ratio of 0.5 times relative within the industry. This suggests a potential market detachment, as Beijing Jingneng Clean Energy Co. Limited trades at discounted levels, while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 63% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.69%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the positive side, revenue from contracts with customers has been a significant driver of growth, particularly in the photovoltaic generation segment, where sales increased by RMB 369,905. Additionally, renewable energy generation projects receiving policy support have contributed to revenue growth, as seen in the expansion of green energy projects in Beijing. The increase in clean energy power price premium has also been a major driver of revenue growth, with an increase from RMB 11,197,931 to RMB 9,377,655. Furthermore, the expansion of green energy projects has led to a 7.85% increase in revenue from sales of electricity in the wind power segment. On the other hand, there are several drivers that have contributed to revenue decline. A decrease in average electricity price has been a major factor, leading to a 3.18% decrease in revenue in the photovoltaic power segment. The decline in sales volume of electricity has also had an impact, particularly in the hydropower segment. The expiration of long-term agreements and cancellation of VAT refund policies have further contributed to revenue decline, as seen in the wind power segment. These factors highlight the importance of monitoring and adapting to changes in market conditions and policy support to ensure sustained revenue growth. The changes in net income and profit margins over the period are quite significant, yet complex due to discrepancies in the data. Initially, net income increased by RMB 0.82 billion, representing a staggering 108.8% period-on-period increase. However, this trend is contradicted by the information on page 36, which shows a decrease of 9.77% from RMB 3,420.9 million to RMB 3,086.8 million. Profit margins also experienced fluctuations. On one hand, operating income and profit before taxation saw substantial increases of 45.8% and 108.8%, respectively. This suggests that the company's profitability improved significantly during this period. Nevertheless, the data on page 36 reveals a decrease in profit margins by 0.61%. The lack of information on page 30 regarding changes in net income and profit margins further complicates the analysis. The discrepancies in the data highlight the need for careful examination and consideration of multiple sources when evaluating financial performance. Despite these inconsistencies, it is clear that the company's profitability underwent significant changes during this period, with both increases and decreases observed across various metrics. The company's financial performance indicates a significant milestone. According to the provided information, the company has successfully transitioned into generating positive operating cash flow. This achievement is reflected in two key sections of the report, page 20 and page 28. On page 20, it is explicitly stated that the company's operating cash flow is indeed positive. Furthermore, on page 28, the report confirms this assertion by stating that the company is generating positive operating cash flow. This dual confirmation underscores the company's financial stability and its ability to manage its operations effectively. The generation of positive operating cash flow is a crucial indicator of a company's financial health. It suggests that the company has sufficient liquidity to meet its short-term obligations, invest in growth initiatives, and reward shareholders. This achievement is a testament to the company's prudent management practices and its commitment to long-term sustainability. The company's debt level and interest expenses have undergone significant changes. On one hand, the non-current liabilities, bank and other borrowings due after 1 year decreased by -$2,380,453, indicating a reduction in long-term debt. However, this decrease is offset by an increase of 35.45% in net current liabilities, suggesting that short-term debt has increased. In terms of interest expenses, the company's finance costs have risen from RMB 1,152,740 to RMB 1,249,401. This represents a notable increase in interest payments, indicating that the company is paying more for its borrowed funds. The overall trend suggests that while long-term debt has decreased, short-term debt has increased, and interest expenses have also risen, resulting in higher costs for the company. The performance of various segments within the company has been analyzed based on extracted summaries. The photovoltaic power segment stood out as a top performer, with significant revenue growth in both RMB and USD terms. In 2025, it is expected to generate RMB 5,079,206 and $4,709,301 in revenue, respectively. Additionally, the results for this segment were impressive, reaching RMB 2,661,042 and $2,786,103. The wind power segment also demonstrated strong performance, with revenue growth of RMB 2,988,390 and $3,086,397 in 2025. The results for this segment were equally impressive, reaching RMB 1,609,541 and $1,610,754. In contrast, the others segment struggled, with a negative result of RMB 602,152 and $548,736 in 2025. This suggests that the company may need to reassess its strategy for this segment to improve performance. The company has a history of paying dividends to its shareholders. On multiple occasions, the company has declared and paid out significant amounts in dividend payments. For instance, on July 31, 2025, the company paid a final dividend of RMB 178,965,000. In addition to this, the company has also proposed and paid cash dividends for both 2024 and 2025. The dividend payment for 2025 was set at RMB 0.18 per share, while the 2024 dividend was RMB 0.037 per share. Furthermore, the company has also declared one-off special cash dividends in addition to its regular final dividend payments. The company's commitment to paying dividends is evident throughout various sections of the report. On page 24, it explicitly states that the company has paid dividends, yes. Similarly, on page 47 and 48, it confirms that the company has indeed paid dividends for both 2025 final dividends and 2025 special cash dividends. Overall, the company's dividend payment history suggests a consistent effort to reward its shareholders through regular and significant dividend payments. That concludes the financial summary for Beijing Jingneng Clean Energy Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.